Have you heard about the potential buyout of Toshiba led by Japan Industrial Partners? It looks like that deal could be over $15 billion. Well, with that deal at the top of the headlines, I figured it might be a good idea to talk a little bit about Japan. After World War II, Japan grew exponentially to the point where by the 80s and 90s, people were starting to say that Japan would be the largest economy in the world. Or at least it was going to challenge the US for that designation. I remember when I was in high school, in my business class, I learned about Japan, the industrial and financial powerhouse. And I learned 3 key Japanese words that started with the letter K. I learned konnichiwa, which means hello. Well, that's the easy word. I learned kaizen, which roughly translates to continuous improvement, a term that was popularized by Toyota. And I learned kiretsu, which stands for a family of companies that have invested in one another. This could be horizontal, where companies in different industries hold shares in one another, or it can be vertical, where companies own shares in their suppliers, manufacturers, and distributors. Technically, I wouldn't consider the kiretsu system as being the same as a conglomerate. But for the purpose of this video, I'll refer to companies such as Mitsubishi as conglomerates, even though they're really kiretsu groups. Now, Japan never became the economy it was supposed to be. Many people say that this was because of the Plaza Accord that was signed in 1985, which resulted in the depreciation of the yen against the US dollar. But that's not the topic of this video, so I'll let you decide the why behind it. One thing that is clear is that even though the Japanese economy hasn't lived up to the expectations of the 80s and 90s, today in 2022, it's still the 3rd largest economy in the world based on GDP. From a private equity point of view, the Japanese economy is interesting. And to show this, in this video, we will talk about 3 private equity firms that have currently been investing in Japan. They are Bain Capital, Carlyle Japan, and KKR. And we'll end the video with a final thought. So let's get started with Bain Capital. Bain Capital, which has had an office in Tokyo since 2006, has been making headlines for bidding on the Toshiba deal, for recently agreeing to buy apparel firm MASH Holdings for 200 billion yen, which is just over 1.4 billion US dollars, and for leading a consortium that bought Hitachi Metals in a carve-out from parent company Hitachi. Hitachi has been restructuring quite a bit over the last 7 years with many acquisitions and divestitures, such as this carve-out of Hitachi Metals, which will change its name to Proterial under Bain's ownership. Now, another example of a carve-out in Japan would be the carve-out that occurred last year when Showa Aluminum, a portfolio company of the private equity firm Apollo Global Management, bought Mitsubishi Materials aluminum business. Now, carve-outs are fairly common in conglomerates. You may have remembered our video titled Europe Private Equity Speech, Improving Investment Decisions in Private Equity in 2021, where we talked about how the European private equity firm PAI Partners carved out Tropicana from Pepsi. Well, because of the nature of the corporate structures in Japan, with so many conglomerates, there have already been a lot of carve-outs, and there will probably be a lot more carve-outs in the future. Now let's move on to Carlyle Japan. If you remember our video titled Geographic Focused Private Equity Funds, we talked about how active Carlyle has been in Japan since it opened an office in Tokyo back in 2000. And we talked about how the firm raised its 4th Japan-focused fund in 2020 called Carlyle Japan Partners 4. Well, one more thing about Carlyle Japan that I'd like to mention is the firm's 2021 acquisition of Rigaku, Japan's leading X-ray manufacturer. In this acquisition, Carlyle purchased 80% of the business, and Mr. Hikaru Shimura received 20% after the acquisition. Mr. Shimura had been leading Rigaku since 1971. That's 50 years. And so, when Carlyle bought the company, they wanted to give Mr. Shimura 20% to incentivize him to help with the management transition, as well as help with global expansion plans. Japan has aging demographics, and I wouldn't be surprised if we see more business succession transactions in Japan over the next few years. Now let's move on to KKR. In 2021, KKR raised $15 billion for its KKR Asian Fund 4. Now it's reported that roughly 30% of this fund will be targeting deals in Japan. Well, a recent deal that I wanted to mention was KKR's March 2022 deal where it bought Yayoi, the largest financial and accounting software provider for SMEs and sole proprietors in Japan, for about 240 billion yen, which is just over $2 billion. Looking specifically at Yayoi's market share in cloud accounting software for sole proprietors, well, it's 60% of the market. When looking at the competitive landscape of this industry, it's clear that Yayoi is a market leader. Now, here's a final thought. Investors, if you are looking to invest in the world's third biggest country in the world by GDP, Japan, well, you probably want to look at corporate structures, demographics, and the competitive landscape. With corporate structures driven by conglomerates in Japan, carve-outs have been and probably will be more common, such as the carve-outs with Hitachi Metals and Mitsubishi Materials aluminum business. With aging demographics in Japan, business succession may provide investment opportunities, such as with Rigaku. And as with any place in the world, Japan's competitive landscape will result in opportunities to buy local market leaders, such as with Yayoi in the cloud accounting software industry. In this video, we talked about 3 private equity firms that have currently been investing in Japan. We talked about Bain Capital, Carlyle Japan, and KKR. Do you know of any private equity firms in Japan? If so, please share them in the comments below so that other viewers can learn from your post.